Hello, everyone. This is the next episode of the Revolutionary Think Tank podcast, episode 11. If this is your first time watching, this is a podcast about political commentary, protest music, and revolutionary thinking. My name is 4AS, and my co-host, Mr. E. So, Mr. E, how are you going today?
I am very well, 4IS. Thank you very much. How are you?
Yeah, I'm going pretty well. And I noticed that you watched my the second part of my Econo-babble video the other day,
I
and
did.
you had a lot of questions.
Yeah, look, I did want to corner you, tie you down, and really pick your brain about some of the stuff that you were going through in that the video essay over those two parts there. I thought it was very, very interesting, but I still want to know more. I felt like you were grappling with some kind of very big economic issues and terminology that is one taken for granted or completely, I guess, misunderstood.
Right.
And I think that's the whole point, right, of the whole Econo-babble kind of discussion is there's a lot of misguided or misinformed conversation that happens on a very high political level. And I believe that's to try and indoctrinate or propagandize certain parts of the political economy to confuse people and get them at least, I guess, aligning, if not voting, against their interests. And so, yeah, I want to pick your brain, if you don't mind, and ask you a bit about what it is that you've been investigating.
Yeah, because I guess maybe this might be where your questions are going to lead, but I at least took it from an accounting's perspective because, as you know, that is my profession. And it's also the reason why in both parts I focus very much on the fallacy of composition. So that if you do listen to it, it's the idea of, logic dictates that a concept works in a certain way that for an individual, therefore it must work for the collective. When Econo-babble shows that when using this logic, it never works from when you have an individual company and expressing that to a government, it just never works the same way. These are concepts that are very much apples and oranges. And, kind of when I did break that down of this perspective of the company versus a government, it's just not comparable, really.
Yeah. I think that's kind of the overarching theme or motif with most of what you're talking about, right? So like
pretty much.
Let's jump in.
Yeah.
I really want to know first off the bat.
Okay.
There's this kind of this idea that you grapple with, and I think it's obviously taken up heavily in the book, and it's talked about like all the time in the media, and especially around elections and stuff like that. It seems to rear its ugly head and just overtake and destroy any type of balanced and well-rounded discussion. But there's this idea: surplus good, deficit bad. Like, where does that come from? Can you explain what's that about?
Okay. Yeah, sure. And I think I might have touched on this a little bit last time, but really where it actually extends from is the Howard and Costello years. So when Peter Costello was actually the treasurer in Australia during the mining boom. So during that period, because in a government budget, again, this is what I was discussing before, that a budget kind of functions similar to what a profit and loss is, which is a very similar like financial report within a company. So you have an income, you have expenses. If your income's more, you have a profit, which to a government's budget is a surplus. But if you have a more expenses rather than your income, that's a loss, which to a budget, which is much more visible in the political landscape, you have a deficit. But because during the mining boom, the mining sector was just doing so well that really, at the end of the day, the government was just receiving more income than what it was actually spending on its programs. The government budget was just continually in surplus from when Costello was in those years.
And Costello, is this, and how, just for our non-Australian listeners, is this a conservative government? What?
Very much a conservative government.
Okay.
Yeah. Howard is... He's either, I think he's the second longest running prime minister, a conservative prime minister. I think Menzies is first, but like Howard was in there for a very long time. And
this period that they're reigning, you're talking about basically the nation riding on the back of the mining boom, and their expenses are always being balanced and overtaken by whatever their income is from this mining boom. Is that what you're saying?
Yeah, like there was a very common rhetoric around that time, and really it's conservative rhetoric here in Australia that continues to this day, that you'll have a conservative treasurer or shadow treasurer say like, oh, we'll make sure to bring the budget back in black, because really when there's a deficit, it's in red, and if it's in black, it means, oh, you've made a budget surplus, or at the very least you've balanced. So because Costello during those years was basically given an easy ride, and he very easily could have his income much more than his expenses in his budget. He basically created this mythos that it's really important that a government have a budget surplus rather than a budget deficit. And of course, at least in Australia, especially after Keating, I guess, privatizing the Commonwealth Bank of Australia and also Qantas. This is also the period that neoliberalism is kind of picking up here in Australia. So this is where the small government aspect of conservative governments like starts to ram home, where neoliberalism is taking a hold in Australia. So that's the reason why budget surpluses also again become prominence, because it can be like, oh, as a government, well, we don't really have to do much. We should leave it to the market. So that's where surpluses become very convenient for conservatives.
Right, very interesting. So then still the idea then of a government having a deficit, what I'm hearing is not too much of a problem.
Well, yes, because really it's interesting that you have you have this dichotomy of surplus good, deficit bad, because this mythos was established during the Costello years, but then straight after the Howard years, you have Kevin Rudd and you have the GFC and the global financial crisis. Pretty much everywhere else, people hit recessions. Obviously, America was massively bad. But the thing is, Rudd, which to this day, everyone says that his stimulus package was, the best in the world at the time. He was actually hammered in the papers, and he was hammered at the time of, oh, but Mr. Rudd, your budget's in deficit. You've overspent your budget. But later down the track, it's actually shown that him stimulating the economy, putting that $900 check in every single person's hand in order to stimulate the economy, it was the reason why Australia had minimal effects from the global financial crisis.
Right.
It was him not only producing a budget deficit, as in him stimulating the economy and pumping money into the economy so we could produce further things. Like this is what Richard Dennison talks about. Him doing that was the reason why we were able to at least divert away from those sort of severe effects compared to other Western countries like the USA.
Right, right. So yeah, from what I'm hearing, that yes, not always a problem having a deficit or spending more or having greater expenses than what you're receiving from your revenue.
Well, yes, but well, it's not really a problem, and this is kind of where the fallacy of composition comes in, because really, as I go into the video essay, is that really the two main financial statements for a company are profit and loss, so the one that has the income and expenses, and then the balance sheet, which has the assets and the liabilities. And whilst a budget is similar to a profit and loss, it's not exactly the same thing, because really, like certain departments within a company, they could completely blow their budget. But the thing about the profit and loss is that it's cumulative. So it looks at the whole company and how it's functioning. So theoretically speaking, what could actually happen is, say you have ABC company and they have 10 departments. For argument's sake, since we were talking about the mining boom, let's say that it's ABC company is a mining company. 9 out of 10 of those departments, whether that's, corporate services, marketing, blah, 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 they could have budget deficits. So their budgets could be, oh, we expected to only spend 100K, but actually because we have a budget deficit, we found we had to spend double that. And what we just thought we were going to bring in terms of income was much less than that. So we kind of blew our budget. But then you get to the breadwinner department, so the mining sector, which makes billions and billions of dollars. And really, because the profit and loss is looking throughout the entire company, that breadwinner offsets all those other 9 departments that had a budget deficit. And as far as the company is concerned, they're like, we made a profit. Who cares that those 9 other companies had a budget deficit? We made a profit. We made our shareholders happy. We're all good.
Where you have in your video, you have like a quote in there where they're talking about like businesses running deficits, and they're fine with that because they can run deficits in certain departments, in certain budgets in those departments, but as long as the company overall is making a profit, that's all they care about at the end of the day. So you can have individually or within a company itself deficits all over the place, as long as overall they're in the green and they're bringing in the profit and it's enough to cover everyone. They're happy.
Yes, with that quote that you're referring to about like, what Richard Dennis actually says is like, Rio Tinto and all of that, they actually produce budget deficits, but the company doesn't really care because they made a profit. I would put an asterisk above that in the sense of if a majority of their departments within the company were making a budget deficit, but like one of their companies, like one of the departments, the breadwinner, if you will, was making a profit, and then the company shows it's making a profit, then they don't really care. Because obviously, if every single department is not performing, then the company isn't going to last that long. Yeah. But yeah, like the whole thing about the profit and loss is that it's accumulative. And whilst they're only looking at one period, so whether that's January of a year to the December of a year, or July of a year to the June of a year, because that's the 2 different financial periods that we have in the world, as long as cumulatively you are making more income, rather than your expenses, the company doesn't care. Even if it's a majority of the company is failing, but that one department is doing really well, and they really don't care.
And like, so this is kind of, but this, all what we're talking about at the moment relates to a company. This is a business
Yes.
model. This is how the corporation works, or or a private entity would work. This is different, though, to how a government should be functioning.
Mm.
And so by translating and or reappropriating that language, those expectations from a corporation or a business model onto a government model, it doesn't translate well, or it's used inappropriately, and then can be used to kind of sling mud, if you will, at a government, because they're applying rules and expectations that you would have on a business that you just couldn't translate yet onto a government, right? And that's part of this Econo-babble discussion.
Yes, because
translated business terminology into a government setting.
Yes, because the fallacy of composition here is layered, because not only do you have a misunderstanding of how a company works, but you also have a misunderstanding of how this works for a government. Right. So we're almost comparing apples and oranges and apricots. So the reason why it's different with a government is, I think it might be best if we explain the difference between an expense and a liability, because just for the viewers, so they at least understand. Now, an expense, which you guys can probably see if you're at least viewing on YouTube, an expense is a cost in the operations of a business in the short term. So the best way I can describe this is, you have a bank fee for the account for the business. So for an expense, it's basically a moment in time. It's that one hit that takes away from the income in a business. So once per month, you have a bank fee. Say, for example, it's $10. As far as you're concerned, from January to June, it's $10. But then, because it's the new financial year, the bank decides to up its charges to $12. So the thing is, because it's that little shot, for 6 months, it's $10, and then for the rest of the year, it's $12. However, a liability. Now, a liability is basically that it's settled over time through the transfer of economic benefits, including money, goods, or services. Now, the thing is, unlike an expense, a liability, it's over a considerable amount of time. And usually there are certain aspects of that liability that are fixed in terms of its terms and conditions. So an easy way to focus this is a loan. So yes, the interest rates of a loan might go up. So that's something that's a variable, but the principal, so you borrowed 10,000 or 100K, that principal is not going to change, because that's what you agreed with the bank. And as far as the bank is concerned, you are paying off that principal for like 10 years. That is an aspect, unlike an expense, that it's just fixed, it's locked in. So the difference between an expense and a liability is the length of it. So whether it's short term, long term, but also whether the terms and conditions, or like the reason why you're being paid, whether it's fixed or not. An expense, completely variable. A bank fee that you pay today could be completely different tomorrow. But a liability, that principal that you're going to pay, it's going to stay exactly the same until you pay back the bank in full. Now, the reason why I did that massive preface is that basically a company budget in comparison to a government budget, it's completely different. And those sort of definitions of expenses and liabilities, they kind of get all mixed in the pot with governments, and things that, according to a company, are completely different. They can look exactly the same in a government budget. So the reason why I say that is, so let's take the NDIS program. This is a program that, deals with disability services, deals with mental health services. It's a big program that goes through the years, and it's going to be a program that just continues on because this is a government service.
And the
Now,
NDIS,
the National Disability
Insurance
Scheme, yes.
Yeah.
Now, the NDIS, that is a program that is going to go through, and really it's going to be an expense to the budget. But as you probably noticed, I just said before that expense is a one and done thing. But the thing is, it acts much like a liability, where it's a program that's being carried over the years. But the thing is, like, it's something that, it acts much more like much more like a liability, and it's also something that's going to bring down that budget deficit. Now, the reason why I said that is that there are also other expenses that, according to a company, would sorry, let me rephrase that. So if there was an expense, if it were to occur to a government, it gets completely taken away by something else in a company structure. So a classic case of that would be, say you have a dividend. A dividend, actually, it has something to do with the shareholders' equity. So really, when you actually input that into the company, you would basically just apply it to shareholders' equity, basically put down like a shareholder's certain holdings, and then you kind of put that away. It doesn't even hit the profit and loss, and therefore it doesn't bring down the profit. But $900 that you're therefore going to give to the public because it's part of a stimulus package, that's going to be an expense. And that's going to create a budget deficit.
Right.
Like, it's the reason why it gets muddied is because you're taking company logic and you're sticking it on the government. And and that's where people get confused, because you have expenses acting like liabilities. You have something that would be shareholders' equity for a company acting like expenses, and you have income that are taxes that are dirty words, and you have things that should be good things for a government, and also help towards government spending, which are taxes that are treated like dirty words. And then you have expenses that are kind of bringing down the budget because it's, I guess, much more visible to the general public. And that's the reason why you have deficits as dirty words and surplus as good words.
Right. Right. So the idea of, like, let's go back to the NDIS example there. You have that scheme that's going over multiple years. So you could look at it in terms of, like, from a company's perspective as a liability, because it's an expense over the long run, which has moments of expenses as you take them off in different financial years. And so you can look at it in terms of an expense as well, because you're outlaying money that you're not going to get back again from that outlay specifically. If you spend money on a group of people that you're helping with their particular disability or what have you, you're not going to get that money back as a result of that expense directly. And so you could consider that from a business perspective as a loss or as an expense or as a deficit in your budget for that particular department, because it's not generating income and it's not bringing anything back. But there are externalities and other economic benefits that might be met as a result of that expense that you just can't, or you don't directly calculate from a business perspective, because that's the difference between a business and a government expense, I'm guessing. Like when a government outlays money as an expense, there are other, I guess, results of that expenditure that are measured or that are felt indirectly. Like I'm assuming that if you have people that are receiving money from a government kind of program like the NDIS, and they're receiving that benefit, which then means that they don't have to provide that expense for themselves, and they're not a burden on the economy elsewhere because they are being looked after, that's an economic benefit on the rest of the budget or the rest of the government's expenses that can't be measured directly by that expense, if that makes any sense.
Yes. Also, you might have hit the nail on the head of something that I was trying to get at before, is that another aspect of this failure to compare apples with oranges is that really an ordinary company, or at least we're assuming the for-profit company, it very much focuses on the ideas from Milton Friedman. So the idea of a company is there to function for its shareholders and only its shareholders. But the thing is, a government budget and a government is like the purpose of it is to serve its people. Like it's providing service, like the NDIS program, whilst it is an expense to the budget, it's deliberately designed to service the disadvantaged in our society. It's to at least provide them with basically to level the playing field, really, because these are disadvantaged people that deserve a proper way of living.
Quality of life.
A quality of life, exactly. And so the goals between a for-profit company and the government are completely different.
So like you have a business who's, in terms of Milton Friedman's understanding of things, is directly and only focused on the interest of the shareholder.
Yes.
And you have a government that isn't run ultimately like a corporation, because it doesn't have shareholders. It has a citizenry, which it is responsible to service, not to provide dividends to, or provide, the cream off the top of its, of its surplus, of its profits. It's supposed to provide services. And that's why I think the big theme of what we're talking about here is, in essence, that yes, you can't just transfer business talk to government and then, try and have people see the world or the politics from that standpoint, because one, it confuses things, and two, it's misleading deliberately. And it's used very effectively, I think, in politics, and it would seem by conservative politicians to justify their positions, which is usually, and in the age of neoliberalism, as you described before, which is to privatize government assets or public assets and cut taxes, especially to like corporate taxes at the higher end of the tax bracket. And so having economic language, or specifically corporate style economic language, and overlaying that on top of the government only works in favor of people that are trying to run the government like a business and trying to cut services or starve the beast, I think it's actually, that's an American term. I didn't realize that's where that comes from.
Yes. Popularized from Reaganomics, if I'm not mistaken.
Wow.
But I guess I'll probably go over this again, just in case people were kind of confused by my explanation before. I kind of want to like hammer home that last point that you kind of made, is that company logic is being imprinted on a government budget and also how government does its dealings. And that sort of confusion is deliberate, so people don't understand exactly what's going on. So when I was going on about, shareholder that like shareholders when they get a dividend, really what's happening is fundamentally when Rudd did that stimulus package, that almost functioned in exactly the same way as a dividend being placed out. Like he was giving people money so the economy can be stimulated. That was a benefit to the society, and I guess it kind of functioned in a similar way as um, an equity dividend payment. But the thing is that because the government functions in a different way, and really that ended up being like an expense to the budget. It just was an apple and oranges situation, and really we are talking about two completely different things. And because these programs are basically running on many years, that it's very easy for these programs to go into deficit, and especially when you have a media landscape or a or conservatives pushing home this rhetoric that a budget deficit is bad, then good public programs end up falling by the wayside because it falls outside good optics for politics, when really the government is supposed to be performing a service.
I remember when I first came here, and like I heard people talking about like the whole idea of government debt or government budget deficits, and wanting to be in the surplus or be back in black versus in the red, or they wanted to be back in the green or whatever it was. I was very confused at the start because someone was advocating heavily and saying, we've got to have a surplus, we've got to have a surplus, we've got to get back in the green kind of thing. And I was sitting there thinking to myself, a government is designed to provide services to its citizenry, to its population. And its main source of income, throughout the ages of any type of state authority, its income comes through taxes. Like there are other ways, I guess, that it can source income, but primarily it comes through the raising of taxes, and then that's how it gets all of its money, and then provides all these services. Let's say, hopefully they are providing services. Anyway, and so I was very confused, and I turned to this person and I said, so you are happy basically for a government to collect your tax money and do nothing with it. You want them to hold on to your money. What's the point of paying your taxes then? Honestly, if the government's just going to sit on it, don't you want them to be basically, okay, fine, not in deficit, but at least spending it all so they're back on zero at the end of their budget or their financial year? Why would you be paying taxes to someone so they could hoard it and sit on it? Don't you want them to be spending that money and providing? And if they got money left over, then spend more money on more services. There's always more need for infrastructure and all that sort of stuff. It's not like there's any consensus out there that we've got enough infrastructure in our societies. There's always room to grow and spend on, if not physical infrastructure, social infrastructure or cultural infrastructure. So, and they weren't able to answer that question very well to me. And so it always was a big question mark for me. Why the hell would you want your government taxing you and holding on to your money? And that seemed just perplexing for these people. And then they went back to their discussion about how we get the budget back in surplus. So I thought that was very, I thought it was funny. And no one was really able to explain it to me. So this has been a very enlightening conversation. And for anyone out there that's listening to this, you need to go and see part 1 and part 2 of the Econo-babble video essays by 4IS. I'll put the links in the video description. Do yourself a favor and go and watch these things. You got to watch.
But thank you, Mr. A. The one last thing I will say is it's probably a much more general point, but I think it relates to kind of what you were saying before, is that really basically the conservative talking point of whenever you do mention a policy program or at least a much more progressive thing like a welfare program or that sort of thing, they always come back with the retort of, oh, well, we can't afford that. We just can't afford that. And it's this basically this serve back of shutting down the conversation. But the thing is that what they're saying, not necessarily that we can't afford that, it's like at least the underlining kernel of what they're saying is we can't afford everything. And really that is true. Like the government budgets, or at least money doesn't grow on trees. But the thing is, we need to work out in society of, where we should focus our budget and our government spending. Like, is it being spent correctly on a program such as the NDIS? I personally would say yes. However, would that be good government spending on stage 3 tax cuts, especially stage 3 tax cuts where you have people such as Scott Morrison making a windfall of 11K in tax cuts compared to if I remember the report from Elizabeth Minter from Independent Australia, like what, $250, $300, like that's a massive difference between the high end in town and your average Joe. So
it's the framing of the question that really comes down to, can we afford this, this Medicare service here? Should we cut it? But the whole question is, can we afford to have this service in Medicare and give tax cuts to the filthy rich, So if they ask the question just with the first part, not the second part, then you're just like, well, yes. Can we afford that? And so that's part of the game, the Econo-babble game, isn't it?
Well, yeah, I guess that was what I was driving at, is either they make a false equivalency. They'll say, oh, well, either it's climate change or jobs, which will it be? Or they'll only give you half the truth. Yeah. So they'll say, they'll know about stage 3 tax cuts, but you want to increase the funding for the NDIS. And they were like, oh, well, we can't afford it because, look at this expense to it and look at this expense to it. The government budget is already at capacity. We can't afford this. Not telling you that, well, I'm being hyperbolic here, but 20% of the budget is due to stage 3 tax cuts.
Yeah. Interesting. How you frame it. That's propaganda for you.
Indeed. And I feel like we've had a pretty good discussion today, Mr. A. Again, just to finish off today, we've got synth wave art in the background. So this one is just a bunch of figures standing in the middle of a square near a high-rise building. So the prompt for this one was Econo-babble babbling to a crowd. And and with that, ladies and gents, this was the Revolutionary Think Tank podcast. Now remember, guys, to keep thinking and keep learning. And to send us off, Mr. E, I'll hand it over to you.
Thank you, 4IS. And to all of you out there, please remember, I am, you are, we are a mystery.